Mathieu Perfetti. Very big welcome to you. He has over 15 years of experience within the PE industry. Prior to joining Threestones in 2021 as head of private equity and now conducting officer, he was at CO Indo-Suez Wealth Asset Management. Big welcome to you. Thank you for joining and moderating our panel. We've got Fabrice on my far left-hand side, is the managing director of Apollo Global Management, the US-based high-growth alternative and mass asset manager, and you lead the Luxembourg office. A big welcome to you, sir. In the middle, we've got Vanessa Grueneklee from Schroders, is one of the conducting officers and is responsible for distribution and marketing, as well as all the oversight activities. Thank you, Vanessa, for joining us. And we've got Markus. Good to meet you, sir, from the Partners Group. He's part of the Private Wealth Europe and Asia team based in Zug, for whom he's worked since 2007. And he's been in the business a long time, 24 years. That's Markus Pimpl. And then finally, representing Neuberger Berman, Giacomo, welcome to you also. He joined in 2018. He's the CFO and one of the conducting officers in charge of the finance and valuation function. Giacomo, welcome to you. Kind of a round of applause, please, for our panelists. Mathieu, over to you.
Thank you very much. Well, it's a great pleasure to be with you today, to be honest, to talk about, I guess, an exciting topic. We already touched base quite a lot over the past discussion that we had. But broadening access to private equity and private market used to be something that we follow quite a lot at LPEA, and I'm very pleased to co-share together with Alexandre Hector around the Wealth Management Club of the LPEA, and broadening access to private equity is something we have quite a lot followed over the past few years, I must say. Quite a lot from the LP side, and today will be on the GP side. We see that there is an increasing demand. We see that there is an increasing offering. So are we in the middle of a kind of revolution? Great to have you with us today. Maybe the first question is from probably a pioneer. I mean, Partners Group used to be a kind of pioneer within the LTIF landscape and so on. Markus, could you please give us a bit of background of let's say, how the mutualization happened over the past few years?
Of course. I have to take a step back, actually. So Partners Group is offering private wealth solutions since more than 20 years. We started with evergreen programs 20 years ago. And when the LTIF regime came into discussion about 10 years ago, I was quite excited because I felt, okay, this gives us now the opportunity to address the mass affluent space. So I launched the first LTIF that was distributed to private individuals. I traveled across Europe, spoke to all the larger wealth managers, and everyone was excited, as we were. But when we then started to take a closer look at the implementation, it became quite obvious that there are some obstacles. First obstacle in the distribution process is simply education. European advisors are not used to sell private market solutions to their clients. So there's a lot of education ahead of us. That's still the case. But almost a bit of a bigger problem, which is a bit harder to fix, is fund operations. Typical private wealth or banking systems are designed for public equity and bonds. But if you want to operate with a traditional private market solution, you have a problem because you can't plug it in. And this was a bit of a frustration, I have to admit, which then resulted in the clear belief, and not only the belief, but also the need to mutualize this part of the industry, because you need to have a feel and touch situation of the end investor as if you would invest in a UCITS fund. And I think this is what we see as work in progress happening right now, and why I strongly believe the mutualization of private markets is underway.
Thanks, Markus. We see that products have changed and evolved over the past few years. Let's talk a bit about the product side and where we stand now. Maybe a question, Vanessa, LTIF 2.0, I must say, is coming up. Can you please give us your views about that?
Well, I mean, I'm coming from, as Klaus Manfeld mentioned, from the dark side, so much more the liquid side. From our side, so the peers working also on the liquid side, we are almost all ready. So some have launched an LTIF 1.0, which have moved on to a 2.0. We are all waiting for the 10th of Jan next year in order to be really actively promote the LTIF 2.0. But most of us have, if not launched, a lot of LTIF in the pipe. I think why is it for us so important to be there, to be present, is that most of us have acquired some private asset capabilities over time. We have a client base which is retail, and that's a good way of promoting it. We should not forget that, yes, you've got IEF Part 2 funds, but the easiest way to reach out to retail is definitely LTIF 2.0, because this is the only product that has got the European passport for retail. So you don't have to have specific registration processes that you've got with the IEF Part 2. So, yeah, more to come.
Yeah. Giacomo, would you tell us a bit more about notably clients' needs, for instance, appetite?
Yeah, sure. I think what we see is that there is a good appetite in the market for non-institutional investor, for the private market, with a smaller investment commitment and with access to different asset strategy. I think here the key point is that these products are hybrid and innovative. Innovative because they are quite new into the market, and hybrid because you have a characteristic of the traditional private equity illiquid products, but as well a combination of retailization, small investment commitment, and a bit of semi-liquid. So I think the key of this product is really to try to find the right mix and flexibility. I think it's still a learning progress process where you need to explain to your client and to the intermediary channel how does it work.
Fabrice, maybe, Apollo, leading fund managers worldwide, how have you been using these instruments, the new kind of instruments we are seeing?
So I think that this is the first time that we have all the tools that we need to go and attack this market. Definitely the LTIF 2.0 is really the game changer. So we have UCI Part 2 and we have LTIF 2, but the LTIF 1 was not adapted to our business. So I think that one thing that was great with the CSSF is that we were able to draft all our documentation for the LTIF based on an LTIF 2.0, but still with the 2.0 not being approved yet. And so the documentation is ready to say that as soon as LTIF 2 is approved, then de facto we can apply it. So that was really helping us phase the product at the right moment. Otherwise, you would have had to wait for, I don't know how many weeks more. And so that wouldn't have met our client-based target. So that was useful.
Thanks. Well, let's talk about challenges, because actually it's probably not as easy to broaden access to private markets. And Vanessa, can you tell us a bit more, notably, you are working in the investor relation functions, distribution functions. What is the place of education for you?
I think that was the largest challenge that we faced. We're still facing it, but after 6 months of promotion and actively talking to a distribution partner, I think we are slowly getting there. Most of our distribution network, they didn't have the knowledge about private assets in general. They didn't really understand what LTIF 2.0 was, what LTIF 1.0 was as well. So there has been a lot of education to be done before. We should probably have started much before the launch of the product as well. Very interesting as well, when we were reflecting when we prepared the panel, is it was not education in just one way. Yeah, yes, we took the time to explain the product to our distribution partner, but we got educated by them as well, knowing that we discovered that for some of them it was important to get non-voting share classes. For others, the way we were paying rebates in the normal asset class didn't work for LTIF because, well, you only have a promotion time which is reduced to 1 year, but after that, nothing is happening. So you cannot take advisory fees. And therefore, we were learning from them, and we, over time, built the product for them to be successful as well. So it was two-way education in the end.
And Markus, you touched base about operation and operating challenges. Can you a bit further develop on that?
Yeah, as said, the status quo was quite challenging, that you simply couldn't get a traditional private markets fund on an operational platform of wealth manager. But also the traditional fund servicing industry, which you quite know well here in Luxembourg, was also not necessarily used to these specific elements of private markets funds. And all these existing processes were designed for, let's say, at maximum a couple of hundred investors. But if you want to reach the mass affluence base, we're talking about 1,000 investors. And this was actually, or still is a problem. But what we have seen over the last, let's say, 2-3 years, that we see a lot of fintech companies popping up at every corner because everyone, or many, are aware of this shortcoming in the industry right now and offer potential solutions to that. So I spent the last 2 years looking at quite a number of these fintech solutions. And this gives hope because by now I would say there are 2-3 in the industry that provide digital solutions with digital omnibus accounts, end-to-end journey for an investor, from eligibility test to reporting and all these things you need to have in the entire process. And this is quite promising. I think it's still early days, and we will see more to come over the next years. But this is quite a good process, I would say.
Thanks. And there is also, I guess, the regulatory part of the distribution, which has changed, evolved, and so on. Fabrice, can you tell us a bit more about that?
Yeah, so I think that for P and credit asset managers like we are, we know how to make a fund, we know how to make a strategy. We don't really think about creating very, very specific strategies for these type of clients because our expectation is that they can invest alongside some of our institutional platforms into a common pool of asset. But so what comes into the game and what is new for us is actually how do you reach those clients? So what is going to be your distribution network? Obviously, when we talk about retail, we don't talk about like someone with 200 euros. It's just in between retail and actual professional investors. So there is some gray zone there where some retail could be opt-in to be a professional investors, but you don't want to play with this. So you just want to say, okay, I have one platform that can just go and be sold to the different type of people on the market. So then the question is, how do you reach those potential client, meaning distribution network? And so it always comes back to using private banks or other platforms like Allfunds or whatever. And then the question is, how do you manage the size of it? Because of course, from a business perspective, you want to reach broadly the market. But under our own regulations, the more distributors you have, the more countries you are touching, the more oversight, due diligence, KPIs, everything you need to do. So do you want to do it yourself, in which case it's a massive amount of work and something that maybe PE firms are not ready to do? Or do you go with intermediaries where they actually do the work for you and then you supervise your intermediary, but that has a cost. And so this is of importance. And then we also see that the distributors have got a big part in the conversation because you can feel that they can put pressure on you to actually have the exact right instrument. They have their word on the fees, they have their word on pretty much everything. And so it turns out that what you thought could be a platform that you can use as such, well, depending on which country you go, then you say, oh, okay, France, we need to have a fund in France, or an asset manager in France, and then what about Spain? So it's along the way you learn how to communicate and to interact with them, but this is definitely the most complicated part for our type of business.
Yeah, understood. But Fabrice, can we talk about a revolution at the time being within the private markets?
Right. So I wouldn't call it a revolution because I think it's just a natural evolution. And I see it for multiple reasons. One of which is the fact that among all the European countries, I think that all the governments are pushing people to think about their own financing of their retirement. So there will be more and more capital deployed to just organize yourself. And so these type of like P-style returns are de facto of interest. Then there's another element which is related to the transition to a greener economy, if we can call it that way. And so we see that all the different states are all admitting that they need private capital to finance this. So then there is the need to have bigger funds with a lot more investors coming in, because we need this money to go into the real economy and being able to finance the transition. So that's the second part. And then some countries like France, for example, have decided that investing in equity is actually not supposed to be subject to net worth tax or some of these type of initiatives. So you can see that people can be tempted to say, well, if I have some money, then I will just put my first money into bricks and have an apartment or something. And then after that, you go to secure retirement financing. And then if you have something left, then you can decide and go to the PE market or to the UCITS market or to the UCI or LTIF market now. So it's just broadening the pool of assets that you can select.
Thanks. Giacomo? Revolution, evolution?
No, I think I agree. It's still an evolution, not really a revolution in terms of giving access to non-institutional investor of new products. I think these new products are giving distinctive way to access to the private market and to partner with the leading private equity firms. I think it's giving the opportunity to have a diversified exposure to the market and to invest in strategy that we discussed this morning are performing well, are usually outperform the liquid market and are less volatile. In this context, I think LTIF is the right product. This is what we see in the market because it's a product providing long-term investment, diversified investment. It's a regulated product, so the fund, the manager, it's oversight by the regulator that give confidence to the investor. As well, it's open to non-professional investor. And as well, one of the key points is that this product has a European marketing passport. We see as well in the market some semi-liquid products that as well need to be rightly balanced between the need of having illiquid strategy more performing and the possibility to give the right level of flexibility.
Thanks. We are very lucky to have 4 representatives of leading fund managers. What is in the mind of fund managers, GPs in such environment? Maybe, Vanessa, can you give us your views?
Well, I think for us, it's key to get the client service right. Yeah, so the way we serve clients is really important. The way we explain the product is really important. If we get that right, and if we get everything which is around client service right, like reporting, kids, fact sheets, right, then a lot of work is done. It's not an easy work because you don't present the product, even an LTIF, as you would do it for a UCITS funds or an IF Part 2. The fact sheets are a bit different. The way the strategy is explained a bit different as well. So I think there is a lot of work to be done up front, a lot of work as well during the life cycle of the product. We are at the beginning of the journey because once you launch, it's for 8 years or 10 years. But that's I think what we constantly have in mind is how do we improve communication? How do we have a compliant communication? How do we ensure that we are constantly improving as well? I think that's very important for us is that client services, well, this is the same clients, no matter what kind of fund structure and what kind of, what do you sell to the client. So you need to talk the same language as your clients.
Fabrice?
So Because we've already discussed about the distribution, I think we can now focus a little bit more on the portfolio. So as we said, depending on which instrument you use, like if it's a UCI Part 2, then it's an open-ended fund. And so you need to pay attention to your liquidity, and we need to have the appropriate portfolio mix. So obviously, whatever is UCI Part 2 is more adapted, more easily adapted to credit type of investments. And when we go to PE, where potentially you have the highest IRRs and returns, then this is definitely not liquid. So then you need to make the good mix in between, when to use an LTIF, when to use a UCI, but then there is also like big downside in using one versus the other. So it's all a combination of what is the best mix for your product at a certain moment. And as we said, like this is still uncertain because at the end of the day, what will be the reaction of the clients? So what is it exactly that they need? And this is to be seen over the coming months or years.
Giacomo, liquidity, illiquidity has been like touch base, discuss, and so on. What are your views on that?
No, I think liquidity is important, but for this kind of products, I think you need to find the right level of flexibility. As Neuberger Berman, we are one of the pioneers in the market for LTIF. We launched the first LTIF in 2021. So we are already in the market with free LTIF, with a fundraising period of 6 months, with a relatively quick deployment of capital, usually in 12 months. So I think this strategy is giving the investor the right level of flexibility because the investor can decide each year how much investing, and I think this is the right compromise at the moment for this kind of product. So liquidity, but flexibility as well.
Yeah. Markus, do you want to add anything?
What comes to my mind is more that we also need to be a bit cautious, the entire industry. So let me overstate it a bit, but it feels sometimes a bit like a gold rush. Every week we see new funds to be launched from asset managers where I never had the idea that they are even capable of investing in private markets. And this is a bit what we have to also as an industry keep in mind, that we have a fiduciary duty. We need to produce returns. We get management fees, we get all these incentives to produce returns. And I have some question marks if it's all about pleasing end investors as much as possible if it comes to liquidity terms and all these things. I think there is no clear answer to that, but it's just like something maybe the one or the other should think about, that it's not only about having a product, providing something, it's rather about what does it mean on the long run. The private markets industry is for the long run. And what do we gain if there are big disappointments? And everyone will finger point on private markets because it didn't work out. And there are like returns that weren't like expected before in the negative way. And this is something where I would hope for more sensitivity and also more clarity, what can be delivered and what is possible at the end of the day.
Thanks for that. Let's maybe wrap up the session and the discussion with a bit of forward-looking approach. Fabrice, if we think about this mutualization 2.0 and the perspective going forward, how do you see things and how do you guess things will happen over the next, let's say, 3 to 5 years?
So I think it's not just a trend, it's the market evolving. I think that Europe is maybe a little bit more reluctant to go like full power in this, maybe compared to the American market where people are way more used to invest in equity and things like this. So, a little bit more cold, let's say, in Europe. But I think this is really happening. And when you look at all the companies like Apollo putting a lot of energy and investment into it, I don't see it having any way back. But what will be the question mark at the end of the day is what is the actual amount that the people will invest? Will it be a real success, or is it like a lot of efforts for maybe not such a high amount of investment? And so this is something that we don't know yet, but it's heavily relying on the quality of the distributors and the type of client they have. And again, if you look at the current market situation with so many uncertainties, you cannot predict how non-professional investors will just go through this turbulent moment. You don't know if they want to be like super secure, sit on their cash, if they're just fine to have some interest rates at 3% or whatever, or if they say, you know, again, like real estate is now a good thing to do. I don't know, and I think it's unpredictable. I got good hope that it's going to go well and quickly and grow, but you know, future will tell us.
Yeah. Vanessa, maybe one thing you had in mind when we were preparing the panel was about liquidity and also secondary evolution of the secondary market, talking about these products. Can you please tell a little bit more about that?
Well, I think it's much more something we are watching out, meaning that, well, with the LTIF 2.0 regulation, there is a possibility to reopen a closed-ended funds, you know, on a regular basis, meaning that you can offer more liquidity than you had before. Some stock exchanges are already thinking, how do we go into this trend? What can we do around this? Does it mean that we will have a secondary market, broker-dealers, you know, starting to exchange our LTIF? I don't know, but this is definitely something that we are looking at. That's an important trend.
Yeah, interesting. Giacomo?
I see opportunities for the future. I think 3 key items to consider. One, I think it's an evolution process, so I'm expecting with the new regulation to have new products into the market, more flexibility probably. The second item is the education that we touch. I think it's important to be sure that these new products are well understood, and we are educating the intermediary channel, so there is an investment to do. Third point for me is the operation, because all these new products and new requirements are expecting to be accommodated with policy, procedures, and platform. And I think Luxembourg is the good place to be, because we have the right platform and experience.
And maybe Markus for the last words.
Yeah, I expect that we will see increased sophistication of investors, which obviously is a good thing to have, but also more transparency. And this will, in my view, look pretty much what we already have in the mutual fund space. Either it be Morningstars, ratings, whatever you can think of, to make the space more comparable. You know, nowadays you offer a private markets fund. With LTIF 2.0, you can have 55% public equity in it. For me, it might be just in some shape and form a UCITS plus, what we might see. And this is what we need to show also end investors. They need to understand what they buy. And this will be provided by external providers, I'm quite sure, and therewith the market space will become much more transparent.
Thank you. Thank you very much. I think we can talk hours about democratization. Let's keep the topics open during lunchtime, so please feel free to jump around and ask any questions to our panelists. Thank you very much for being with us today and for having shared these interesting thoughts.